On May 23rd, spot Ether ETFs cleared the main hurdle before they can trade, and yet, as of today, they're still not available for buying. What's going on, and when can we expect the final approval of Ether ETFs? Let's delve in. Ethereum is the second largest cryptocurrency after Bitcoin. Its market cap of $406 billion accounts for roughly 18% of all crypto. Before any spot Ether ETF can trade, it must undergo an approval process with the US Securities and Exchange Commission. First, stock exchanges file proposals for rule changes to allow for Ether ETFs. These are so-called Form 19B4. They are filed every time a stock exchange wants to list a new product. These forms must show to the SEC that fair trading and investor protections will be in place for the new product. After much back and forth, the SEC approved these 19B forms for 8 funds. Among them are familiar faces, as was the case with spot Bitcoin ETFs. But we're missing Wisdom Tree and Valkyrie. Later, Cathie Wood's ARK21 dropped out of the race to issue spot Ether ETF. ProShares will join the list later and issue their own spot Ether ETF too. The main sticking point for the approval of 19B4 was Ethereum staking. If you do not know what staking is, here's a quick summary. Cryptocurrencies run on blockchains. Blockchains are ledgers with each new record validated by peers. Before 2022, Bitcoin and Ethereum used a proof-of-work system. This system rewarded miners who competed to validate a block to be added to the blockchain. Think of a block as a file containing buy or sell transaction records. Whoever was the first one to validate the block got rewarded with a little bit of Ethereum or Bitcoin. However, in 2022, Ethereum switched to a proof-of-stake model. This model operates like a lottery rather than a competition. Instead of competing for rewards, Ether holders can stake their Ether, which is used to update the ledger. In return for participating in the staking lottery, Ether holders can get rewards. These rewards add up to 2 to roughly 4% per year. So, unlike Bitcoin, holding Ether can generate extra income for spot Ether ETFs. And this is where the SEC disagreed. Spot Ether ETF applicants had to drop earning income from staking in order to please the SEC. After 19B4, the next stage is review and approval of S1. S1 is a registration statement that fund issuers such as Grayscale or Bitwise must file with the SEC. S1 is a must every time a company issues new securities to the public. The S1 statement for Ether ETF contains description of investment risks. It also outlines other legal stuff required by the SEC. For instance, Coinbase will be the go-to custodian for many Ether ETFs. Also, investors in these funds will miss on staking rewards or any other forked or airdropped assets. So, as we see, there are benefits of holding Ethereum directly instead of buying ETFs. If we look at the SEC website that tracks S1 filings, we see that there were amendments to S1 statements. For instance, Bitwise filed an amended S1 registration statement on June 18. The amended S1 is typically filed in response to comments from the SEC. This means that the approval of S1 statements is proceeding. Some analysts say that S1 can be approved within 90 days after 19B4 forms approval. So we're very likely to see spot Ether ETFs trading by August. Also, according to the June 26 article by Reuters, the S1 approvals are in their final stages. Minor issues are to be resolved, according to lawyers who work with the SEC. While Reuters provided an estimated approval date of July 4th, it could extend for another week or so. So far, we don't know expense ratios for Ether ETFs, but they will likely be around 0.2%, judging from Bitcoin funds. And Reuters earlier reported, for instance, that VanEck is gearing to charge 0.2% for its Ether ETF. Also, these funds, they will likely have some sort of incentive structure to the fees. For instance, they will charge lower fees until certain asset threshold is reached, like $1 billion. And that is it for this video, guys. In my next video, I will compare all Ether ETFs once more details emerge. And stay tuned for that and subscribe for my channel. I regularly post content on investing and personal finance. Thank you for watching.